Hello, this is Pat Walker at Mission Winners making a follow-up video concerning short interest. We'll look at a couple of charts here real quick. Something I look at is short interest. I like to see short interest not be too high because it means that maybe some sophisticated short sellers know something. But I don't mind a little short interest. Why? Because if the stock lifts up in price, they may have to cover, which creates more buying pressure. So here we go. We're just going to look at a couple. Short interest, 1.7 days. What does that tell us? If you take the average daily volume of the stock, okay, I'm going to show you something here real quick. I'm going to go to the daily chart. Average volumes, we're going to round here, okay, and just say 4 million shares. If we take 4 million shares times 1.7 days, that gives us 6.8 million shares short. This stock has 6.8 million shares sold short on Jinko Solar. Now its average volume is 4 million shares a day, so that's how we get 6.8, 4.0 times 1.7. What does that tell us? 1.7 days short. If this stock starts to lift up, there will be buyers coming into it. But there could also be people that sold the stock short. If you sell short, how do you take your position flat? You have to buy it also. And that's what that means. Now I'm going to go back to the weekly here. That's where that's at. Okay, now, thank you for, do you mind to explain what is the percentage after days? Let's see here. Hold on a second. I've got to go through here. Short interest. What are the shares outstanding inside the percentage parentheses? Short interest. This is group, in right here, it's group number 1 out of 197. I don't know if that's what you're looking for, but we're going to keep on going here. Same thing. Short interest, 0.7 days. So it's not of any importance. I'm just going to run through 1.7 days, not a big deal, okay, to cover. 0.6 days, not concerned. 1.8 days, that's not too bad, okay. 0.1, nothing. 3 days, oh, okay, now it's a little bit higher. What does that mean? 3 days of short interest. 3 days of average daily volume. What does that mean? If this stock starts to lift, why? Why would it go up? Because there are buyers, but it could also be short sellers that need to buy their shares back and cover. You sell short because you think the stock's going to drop. If it doesn't and it starts to go up, you need to buy your shares back to limit your loss. All right? So that's in a nutshell short selling. When you sell short, you think you want price to drop. All right? That's what that is. The percentages after days of short interest stands for. Gosh, I don't. Oh, right here? All right, maybe this is what we're talking about. This is a good question. Percentage right there. It's up 19%. What does that mean? This number has increased. 3.1 days, it's increased since the last report by 19%. What does that tell us? More shares have been sold short. By how much? 19% more. All right? That's what they're talking about. Now this one, short interest, has decreased by 13%. There you go. I'll do one more here. Okay. Short, this still has 7.5 days short interest, but it's decreased. Why? What does that mean? The short sellers have bought back some of your shares, their shares. Now this will be a great lesson. Watch. This stock ran up here and started to fall. They're really happy, okay, in here, and I'm going to show you this. I want to explain this to you. Short interest decreased. Why? Why did short interest? Why did those shorts cover? Here's why. Because the dang price was going up. Here's the analogy. I want to flip the coin. You buy a stock and it starts to drop in price. What do? You sell it. You go short a stock and it starts to go up in price. What do? You buy your shares back. Hence the short interest decreases. Anyway, I just wanted to kind of handle this on shorts, okay? It's an interesting topic, but I'll also share this with you. I think it's pretty important. Master going long before you start tackling going short. Refine your skills going long. And then I'll also flip this coin and share this with you. There's another thing you can do. You can always go into and buy inverse ETFs. Here's an example, SDS. Watch this. Twice the inverse. I'm going to show you the daily chart. This goes up, all right, when the market's falling. It's the inverse. If the S&P 500 is going up, this thing's falling. What's the S&P 500 been doing for a while? It's been going up. This has dropped in price. If the market starts to fall, this will go up in price. And it's liquid. That's 10 million shares a day. I'm not recommending it, but I just wanted to explain that. I covered a lot of material, but I hope it helps you, and I thank you.